Tesla stock made an absolutely massive move here today, exploded to the upside, over 7% move, up over $26,000 on Tesla shares here today. Massive mover, and it even shook around many other stocks in the market. So in today's video, I thought we'd go ahead, we'd talk about what happened here today. Why is this stock up huge? And is this going to last? Like, are we going to continue to see momentum in Tesla stock, or is this stock just going to fade right back down? We know Tesla's had an amazing year. We know it's had a pretty horrible past month or so. And so a lot of people are kind of looking out there and they're like, is this as low as we're going to get Tesla? Are we going to get these shares lower? Is this just, bright skies from here and Wall Street's going to buy it? Because let's be very clear, today's 7% plus move, this was Wall Street related. This is Wall Street money. Retail didn't move this stock 7+% here today, okay? Certain thing happened. Wall Street said buy, buy, buy. And is this just a little rug pull situation, or we got something lasting here? So hope you guys enjoy this. As always, appreciate y'all joining me as always. And thanks for being subscribed, folks. I appreciate you being here, okay? So Tesla moved up so much here today. It even moved up other tech-related stocks. Meta moved up on behalf of Tesla's huge move here today, over 2% mover there. Amazon moved up. So overall, it was a great day in the public account. The public account's been getting hit for this past month or so. But, man, today was a excellent day, okay? So what happened in regards to Tesla? All right, first, let's talk about that. What happened here today is, to put it quite simply, Wall Street said, buy. Let's put it that way, okay? Baird's elusive best ideas list. Tesla got put onto this list, which comprised of stocks that the brokerage believes are the best investments as 2023 heads to its final quarter. So they think Tesla stock's about to go up in a huge way. Well, why do they say this? Well, Ben Callow, an analyst for Baird, included Tesla on the list due to its numerous catalysts that could send the stock even further upward this year. Already up over 94% this year, Tesla shares have rebounded nicely from a slide in 2022, right? I mean, at the end of last year, beginning of this year, Tesla was, just over $100 a share. It was literally $101 a share. That stock just got brutally sold off. But I mean, to be quite frank, it was just one of many companies that had that happen. NVIDIA, Meta, AMD, all those stocks just got absolutely pummeled, 60, 70, 80%. Shopify, Netflix, the whole list of them, okay? Which was caused by macroeconomic conditions outside the company's control. And by the way, the company does still have many things going against it that are outside of its control right now. And we'll talk about some of that in this video. Product delays and supply chain issues have caused turmoil for nearly every automaker over the past 3 years. Tesla's primed to finish the year up close to 100% this year, as long as nothing catastrophic happens, right? We'll see. Stocks can be very volatile, especially Tesla stock. The moves are ridiculous. Callow lists several things in terms of catalysts that should help Tesla stock continue its monumental climb in 2023. He says, quote, potential upcoming catalysts for the stock includes Cybertruck launch. That's the first thing he mentioned, right? A wider scale adoption of full self-driving, he says, Tesla's suite of advanced driver assistance systems to navigate city streets. Continued growth in the energy business, expanding into new markets, and possibly AI Day, among others, okay? So, a few things here, okay? Let's break these apart, okay? Cybertruck, I actually want to get more into Cybertruck a little later on in this video because something really positive there, something really negative I think is going on in relation to Cybertruck we got to talk about, okay? Wider scale adoption of full self-driving, we'll see. The price point is obviously very, very elevated still. I still think Tesla ultimately long-term needs to have a monthly plan that is affordable to the masses if they really want this technology to go crazy. So that's not one that's necessarily won me over there. Continued growth in the energy business, I do believe that is something that, yes, I do believe we're going to continue to see strength in the energy business, and especially with how much government spending is going on right now around new renewables. Tesla's making a lot of interesting moves. I'm seeing Tesla's also putting superchargers everywhere in Vegas. I'm like, holy smokes, literally this is a change in just the past couple months. So there's something going on there, some sort of incentive Tesla has to also build all these superchargers all over the flipping flapjack in place. So the energy business, wouldn't be surprised at all. Did we switch cameras or is it still the same camera? I don't know. I wouldn't be surprised if that business continues to be strong. Expanding into new markets, most of the main markets are already in. AI Day, could that move the stock around? Sure. But usually that moves the stock around more from the retail side. Wall Street usually doesn't care that much about things like AI Day. So we'll see, if Tesla had something game-changing to announce that Wall Street was able to understand, sure, that could help. But I wouldn't hold your breath on that. Don't hold your breath on that whole situation, okay? Now, Tesla Cybertruck is moving closer to deliveries this morning. More Cybertrucks left Giga Texas and are headed presumably toward Fremont factory, where the fleet of pickups made it last week, right? So exciting, obviously, seeing Cybertrucks get moved around, and I've seen several videos over the past couple of weeks of like Cybertrucks, getting, I just want to say transported around. Let's just call it that, okay? I don't know where those are going. I don't know if those are actually going to customers or just Tesla themselves, but there's plenty of videos out there where they're getting transported around. CEO Elon Musk has said for years that full self-driving will be solved this year. And while we are skeptical that this will happen in 2023, Tesla's full self-driving suite is more robust than it's ever been. Obviously, Elon's made a lot of promises in regards to technology for a long time. Eventually, Tesla's going to get to the finish line. We'll see. Don't hold your breath on that in terms of, if you're hoping in the short term. Although they're closer than ever, that's a great thing, but they're still not there, right? Baird has an outperform rating on the stock and a $300 price target, okay? So first thing I want to discuss that I think's a potential negative here in the short term in regards to Cybertruck, okay? And I was even doing some thinking about this. So personally, obviously, I've been a Tesla shareholder for many, many years, took the most insane profits I could have ever imagined from a stock, from the stock a couple of years ago, and phenomenal. And I still obviously hold many hundreds of thousands of dollars of shares in Tesla stock, right? And I've been a Tesla customer for years. My first Tesla ever was a Model 3 in 2019, if I recall. It was the 2018. I think it was 2019 I bought my first ever Tesla. It's Model 3. Great experience, and I loved Teslas ever since. I currently have Model X and I have Model S Plaid, right? So I was thinking about myself, right? Because I have an order in for a Cybertruck. And I was thinking, if Tesla wanted to deliver me a Cybertruck, at the end of this year, would I go ahead and buy that Cybertruck? Now, keep in mind, when I do get the Cybertruck, I'm likely going to get rid of my Plaid. Why am I going to get rid of my Plaid? It's going to serve no purpose. I work from home. My wife doesn't work. So there's honestly not even a need for us to have two cars. It's honestly kind of a waste of resources, in my personal opinion, right? But nonetheless, to have three cars would even be a bigger waste of resources when, one person doesn't work and the other person works from home. Like, that's just a complete waste of resources, right? So I would likely get rid of the Plaid. But here's how I'm thinking about this, right? The Plaid I still owe like $80K on that roughly, and I pay a 2.49% interest rate on my Plaid, right? And I got that back in, I think it was 2021 or so, when interest rates were insanely low. So if I was to go ahead and, let's just say I ran the numbers and just kind of played around with this a little bit. If I was to get that same Model S Plaid today, it would be $118,000, obviously, before all the, taxes and all that other crap, that's added on there, right? If I was to go get that same auto loan, right, that I got a few years ago, today from Chase would charge me likely a 7 to 8% interest rate today. 7 to 8%. Now, I went ahead on Tesla's website and I was like, let me see what Tesla would offer me likely for an interest rate. Now, Tesla claims they could get me like a 6.2% type rate, right? Which would undercut kind of probably what Chase would charge me right now, which would be probably 7 to 8%. We're still talking about nearly 4 percentage points higher than what I got the Plaid for a couple years ago, right? So that's a pretty significant number, and especially when you tack on several years of this, right? It's a big difference in the amount of money you're going to pay every month. Every month. And at the end of the total of what you owe for that car, it's a much, much bigger amount. You could be talking about, if you're talking about between a 2% interest rate and a 7% interest rate, you could be talking about, tens of thousands of dollars of difference, potentially, depending upon how long you kind of take that loan out for, right? A mortgage is the worst. Like, the difference in a mortgage between a, 3% mortgage and a 7 or 8% mortgage is like night and day difference. Those are the worst because obviously the dollar amount and how far you push that out. But even a car loan is pretty bad, right? So if I thought about myself and I said, okay, if I had the option to get a Cybertruck this year, would I get the Cybertruck this year? And the answer to that is no, I wouldn't. It would not be a responsible financial decision from me. And as much as I love Tesla, I wouldn't buy it this year. I'll wait till interest rates go down. And if they don't go down anytime soon, I'm perfectly fine. I got a Model S Plaid to drive in the meantime, and that's perfectly fine with me, right? But that's the way I look at it. And so now the thing with me is it's more of like a financially responsible decision, right? Is it going to change my life one way or another if I had the Cybertruck or a Plaid and interest? No, for me, it doesn't matter at the end of the day. It does just from the principle of like me caring about money, right? And just trying to make somewhat wise financial decisions. But the other problem is for most people, they don't have the sort of money I have. They can't afford it. Just to be flat out. The difference between a interest rate, if you're going to pay a 7 or 8%, and mind you, if Tesla's offering a 6.2% interest rate, it's for if you have super great credit. Most people don't have super great credit. So what most people would have to pay is a 7, 8, or 9% interest rate. Now, in order for Cybertruck to really run up numbers, we need to sell this in mass. It can't be just a little volume mover. If they sell 10,000 Cybertrucks, it's nothing. It's not going to move Tesla's numbers. We need to sell hundreds of thousands of Cybertrucks consistently, pretty much almost quarter in and quarter out to really start shaking up those numbers and really start giving us a next big boost. If people can't afford the Cybertruck, that's a problem, right? Because of interest rates. That's not just a problem for Tesla, it's a problem for all automakers. And so that's something we all have to take into account here, that we have a big problem working against Tesla that just in past years, this wasn't an issue. Interest rates weren't an issue for Tesla's in its whole life cycle until now. Literally. Interest rates weren't an issue 5 years ago, 7 years ago, 10 years ago, 2 years ago. It's just now it's becoming an issue, and that's completely out of Tesla's hands right now, right? Now, the other thing is, obviously, in regards to Tesla, we all know the revenue story. It's going to be phenomenal. Like regardless of kind of, what the economy does or interest rates do, Tesla's still going to put up their numbers. We know this, right? But where the problem comes in line, in Wall Street, remember, Wall Street's not focused on the next 10 years for Tesla. The retail investor might say, yeah, man, I just care about what Tesla's doing over the next 10 years. Wall Street doesn't care about the next 10 years. 99% of Wall Street does not care about the next 10 years for Tesla. They don't even care about the next 5 years for Tesla. They don't even care about the next 3 years for Tesla, okay? And so whatever revenues Tesla's going to over the next 10 years, that just matters for like retail and a very select amount of fund managers out there. The main issue in the short term Tesla has, and the main question mark we have here, is this. Tesla obviously trades at elevated PE ratios versus basically the entire auto sector. That's nothing new. That's been that way since the beginning. It's going to continue to be that way in the future, right? But when you trade at elevated PEs and you have obviously a CEO who's pretty hell-bent on, doing whatever it takes to move units, margins get hit. When margins get hit, profitability gets hit. So we don't know, to be honest, Wall Street doesn't know if this company's really going to do 350 this year, 345. They don't really know if the company's going to do $5 next year, right? And so it puts them in a kind of a weird position where they're like, are they really going to do these sorts of numbers? Are they really going to hit these sorts of margin targets, profitability targets, if the company's going to cut price more, right? And remember, Tesla's cut price so much already. And this is in an environment where unemployment's 3%. What happens in an environment where unemployment was to start to climb? What happens if we had an actual credit crunch? Credit crunch meaning a situation where, instead of getting a loan, being able to get a loan at 6.2%, 7%, 8%, you can't get a loan because the banks just aren't lending at that potential time. Well, what happens to Tesla's numbers in that sort of environment, right? It'd be pretty devastating, at least in the short term. So that's one of the issues we have kind of working against us. Another issue we have, again, working against us is China's economy is messy. Now, it's always hard to get the real information out of China, but it's not looking good. I'm hearing youth unemployment 20% plus in China right now. China's starting to cut interest rates. When you're not going to cut interest rates unless things are starting to get really ugly, right, in terms of your economy. And China has grown into, the second most important market, in my personal opinion, for Tesla overall. They have the most important gigafactory, in my personal opinion, in the world for Tesla, that Shanghai one, because of not just what they produce for China, but also other markets. But it's just such an important market in general. So if China's in a huge economic slowdown, then guess what? Tesla cuts prices, which obviously they've been doing, and they've been cutting price, right? But on top of that, their competitors cut price, and you're just in a full-on price war, and the margins get hit, profitability gets hit. And maybe those EPS numbers are harder to hit as time ticks on, right? So that you have kind of working against us. The next thing you have working against us is Germany, right? Germany, a massive market. Obviously, Europe in general, a huge market for, when you really think about the level of importance for Tesla in terms of markets, you think about United States first, you think about China second, and after that, you think about Europe, right? Okay, well, here's the problem. Germany is exited a recession supposedly, right? But nonetheless, Germany's in recession-ish type times right now, right? Now, usually that wouldn't be an issue because usually you'd be in a situation where, the ECB would look out there and say, okay, folks are starting to face recession. We're going to go ahead and cut rates. We're going to, do whatever it takes to kind of get out of this mess. But you can't do that right now, right? The ECB is still raising interest rates, right? And they can't lower interest rates right now because they still haven't even defeated inflation. If you look at inflation in Europe in general, it's in a horrible place, folks, okay? I don't know if you guys, obviously everybody's so focused on the United States and what our CPI numbers are here. It's way worse in Europe. And I'm not even talking about, it's not even a close competition. It's a disaster. So the European Central Bank really can't lower rates anytime soon. So even if the European economy gets hit hard over the next 6 to 12 months, if that was to happen, and it's a realistic potential, right? If that happens, the ECB is not going to be able to magically lower rates until inflation's under control. And so once inflation's under control, then they can start lowering rates. But in the meantime, that can cause so much devastation. So you had a messy situation in Europe, right? And all these things are out of Tesla's control. But they're all things that are very, very big negatives for the company for the next 6 to 12 months, right? Then on top of that, you tack on Cybertruck getting up to ramp production. That's exciting. But on the flip side, people will say, well, usually when Tesla ramps a new vehicle, margins aren't quite there. It's a negative hit to profitability. It usually takes them at least 2 quarters, if not 3-4 quarters, to really start to scale it and really start hitting, nice numbers as far as margins, profitability. It takes some time to get there. It's not like they just start producing Cybertrucks and like, oh, we're making so much money now. No, it's a process to go through to start producing those vehicles and doing it profitably, and then the cash flow starts pouring in. So nonetheless, if you think about what Wall Street looks at, Wall Street's very focused on the short term all the time. Why did the stock go up 7% today? Baird put on that list and everybody's like excited. Oh man, I got to trade Tesla here today. Wall Street's all looking at this. Oh, this is a popular trade for the day, for the week, right? That's Wall Street for you. They're focused on the next 6 to 12 months, the next 9 months with this stock, right? And they're the ones that control this stock now. The stock price is not controlled by retail. The days of retail controlling Tesla stock are long gone, folks. Those days are long gone. If Wall Street wants to sell this baby off back down to $100 again, they'll do it. If they want to bid it up to 300 plus, they'll do it. Retail doesn't control the stock at all anymore. Not even 1%. This is all Wall Street money now. It wasn't like retail magically heard, oh, Baird put it on the best list. I got to go buy Tesla stock today. Let me bid it up 7%. Hell no. This was all Wall Street today. So for that reason, we're in kind of in my opinion, a bit of a pickle here in regards to Tesla, right? If you're thinking, is the stock going to continue to go up? Is it going to go back down? I think really what it depends on is NVIDIA. If you're thinking about the very short term, as in the next couple of weeks, it's NVIDIA. If NVIDIA comes in, smashes numbers, remember, NVIDIA is expected to have like 65% revenue growth this current quarter we're in, 100% plus the next quarter, 100% plus revenue growth the following quarter. If NVIDIA comes in, smashes it, and they're like, we're going to grow even faster than what all analysts think for the next several quarters. Okay, Tesla's going to move up on that. The Qs will move up on that. The NASDAQ will move up on that. If NVIDIA comes in and kind of, lays an egg and they report great growth, amazing growth rates, but they're just not quite up to what Wall Street expects or kind of in line, then we're going down. NVIDIA's going to go down. The Qs are going down. NASDAQ's going down. Tesla's going down. It's really as simple as that in the short term. If you think about the super short term, like the next few weeks in regards to this one. But even if we're looking out like the next 6 to 12 months, there's just a lot of things that Wall Street's going to get caught up into for the negative, right? And so my hope it's actually Tesla stock goes down in the short term. I'd rather Tesla stock goes down a bunch and be a buyer of Tesla stock as a long-term investor in the company. Tesla, I bought in 2023 for the first time in years. I bought the stock at the beginning of the year. I mean, it was trading at like a little over $100 a share. It's like, okay, you want to give me Tesla for a little over 100? I'll take some shares off your hands. And that was the first time I bought Tesla since probably 2019. Like, it had been so many years. But if you're going to give it to me for that discount, I'll take it. So we'll see where this whole thing shakes out and where Wall Street wants to take this. But there's a lot of negatives working against Tesla in the short term that Wall Street's going to get caught up into. And that is what it is. And I hope they kind of get caught up into it. And I hope they end up just selling this baby off because it would just present a better opportunity with better pricing for retail. At the end of the day, everybody's got to find an amount of money, right? And would you rather buy Tesla at $100 or $200? Or buy it at $100 or $300? I hope you know the answer to that. I would much rather buy it at 100. I can buy a whole damn lot more shares than buying it at 300. I appreciate everybody joining me as always. Thanks so much for being subscribed, folks. We'll see how all this trades out. It's a huge week. NVIDIA earnings obviously coming, and also obviously Jackson Hole Powell. We'll see what happens with that whole situation. Much love, and have a great day.